Hello, Trade Pros. Hello, Trade Pros. Good morning. Welcome to our morning market update for this beautiful Thursday. Oh, I can't believe it's Thursday already. If we do it for like Tuesday, maybe it'll be a Tuesday. No, but it's Thursday already this week. Thursday, December 4th of 2025. This is George Papazov from Trade Pro Academy. I got a good one for you today. It's going to be short. It's going to be brief. If you've ever wondered if you could ask me some questions that are outside of what's happening in the morning market update, the answer is yes. You can always ask me any questions you'd like. And today we're going to actually have a window for it at the very end. We can get a little dialogue going on before we open up the trading room because it's going to be a short morning market update. I'm not going to lie to you. It's a slow news cycle. Markets are near the all-time highs or near at least the high of this run-up and close to all-time highs at this point. We're going to set the trading plan. We're going to look at the charts. We're going to do all of that. And the actual news is very short. So let's dive into it. And, if you want to think of some things to ask at the end, this is the chance. I'm here for you guys. Number one, I love you. Number two, there's time today. All right. Here's the snapshot of the market. Equity futures are kind of slightly higher to kind of slightly flat. Like uneventful. There's no point of quoting them all because it's kind of just where we were before. All right, dollar is a little stable near 98.90. U.S. 10-year at 408, 4.08, very close to where we were yesterday. Oil's a little firmer. Gold is down slightly. Copper is down 0.8%. The rocket ship that is known as Ropper, I guess. A rocket ship made of copper would be Ropper. A rocket ship made of copper wouldn't leave the Earth, right? Some would argue they all hit the ceiling. Just kidding. I'm not going to go there. All right, crypto, Bitcoin's down 0.5%. Ethereum is up 0.7%. So you can see things are kind of all over the place. The big news today was jobless claims. So we haven't had an initial jobless claims report for a while. And this will be the last piece of jobs data we do actually get before the Fed meeting on December 10th. And then the biggest jobs report in months because the government shutdown is going to happen in 6 days after the Fed. Because, the government was closed and they still can't get back to work properly and get on top of things to schedule a jobs report before the all-important Fed meeting. It would be nice if they did, but they can't get it together in time. I don't blame them. All right, it's the holidays. Who's actually working these days? All right. That's irony there, or not irony, but a little bit of a joke. Okay, 8:30 in the morning, we got jobless claims. There's three kind of aspects of this report. 1, 2, 3. One is continued jobless claims, and that's a running number. All right, so that's at 1.939 million. The expectation was 1.961. All right, this is kind of the lower impact part of the report, but it being lower is actually good. It's a good thing. Because you have less people that are filing for initial jobless claims or unemployment insurance. But it also doesn't mean it's a great thing because it might be people that have fallen off the period of payment where they're eligible for unemployment. So we need more information. Well, this is where the initial jobless claims number comes in. This one came in at 191,000 versus 220,000. That's really good. That's 30,000 people less than expected lost their job or filed for unemployment for the first month or first time. Not ever, but first time post-employment. All right, that's the high impact report of the day. And the 4-week average is 214,000 versus 223,000. So all good things on the labor market front. Not good enough, I think, to roil the fact that the Fed is going to cut rates. Expectation is for a 25 basis points cut in next week in December. And that would give some life to the Santa Claus rally that would be expected around that time. All right, so what else is on the calendar for the rest of the day? We got a couple high-impact events, mostly low. All right, the high-impact event of the day, believe it or not, is the 3-year, 10-year, and 30-year bond auction announcement. And then we actually do have a 4- and 8-week T-bill auction going down at 11:30, but that's 11:30. The not so important ones are low impact, but there's news nonetheless. Just when you hear at 9:58 in 2 minutes time, news is coming out or news hits, so you're not alarmed today. It's durable goods orders, factory orders, X-transportation, and non-defense caps X-air, which I don't really watch for any of that stuff. All this is for September, by the way. So it is now December. So this data is 3 months old, which is why it's not as important. A lot of these indicators have 3 iterations to them, right? The first one's the flash readings, which is flash PMI. That's the most important. It's the first look at the number. Then the secondary number gets a little more accurate because there's a little more data points and it's revised. That one is called preliminary. All right, it's still kind of important to market moving. And then the last one's the final. Nobody really cares about the final because by the time you have the final revision and the final print of the number, you're on to the flash of the next month. All right, so just something you should know about on these reports. The big headlines today: Donald Trump says the U.S. is going to either let the USMCA, formerly known as NAFTA, he said it's either going to expire or renegotiate a new deal with Mexico and Canada. All right, it's interesting. Those are really the 2 options anyways, so it's not new news, but it is in the spotlight. All right, U.S. halted some sanctions on China's spy agency to maintain its trade truce. This is an interesting one. Donald Trump's administration is considering whether to allow NVIDIA's H2000 exports to China. That license is under review, so this is some NVIDIA-specific news here that could have an impact on NVIDIA, have an impact on tech stocks, and maybe whip around the market a little bit as we get some updates going on there. Other than that, you know what? There isn't much. I don't know what to tell you. I scraped and I fought, and I just couldn't find anything that was too relevant. You know, some talk about insider trading from the government. You know, the government stocks plan that was supposed to halt activity is not doing anything. Surprise, surprise. You know, a whole bunch of other stuff too. I don't know. I don't really care about that stuff. Let's turn around and look at the charts, spend some more time maybe getting our hands dirty and doing some price action stuff, and then you guys could ask your questions, and we'll be on our merry way for the day. I love you. Let's turn around. I have a Mac. I don't know why I'm singing that. David, hello. King Kong, hello. Michael, good morning, sir. Polly, hello. And Marco. All right, we're all here. Most of us, the usual suspects are here. Let's rock and roll. Let me answer some of the questions real quick, then we'll look at the charts. Good morning, all. As George said in his podcast last week, let's get out there and get some garbage goals, just like Phil Esposito. Esposito. Esposito is the perfect example of that statement. But yeah, let's get out there and get some garbage goals. You know, I love garbage goals. Garbage goals are the result of effort and being in the right place at the right time. And that's a skill in itself. So we're all at the right place at the right time. You know, we just got to see what comes our way. All right. I have a Mac, and Sierra chart seems to be only running on Windows. So now I only use TradingView. Do you think I can trade like that, or Sierra chart's a must? I didn't seem to have an option of a DOM on TradingView. David, you know that I'm on Mac, right? It works on Mac. It surprisingly works really, really well on Mac. Sierra charts using crossover. I don't have to do any dual booting with what was that software called that costs like $500. Problem with that software, the dual boot partition on your hard drive, is that you have to buy Windows too. So many things I'd rather buy than Windows. Like a home skate sharpener. Bought that for myself. It's $2,000. I'm excited to get it. That package is coming tomorrow. So fingers crossed I get it tomorrow. All right. David, if you have any follow-up questions, let me know. I use something called crossover, by the way. Crossover, and you could deploy a bottle for Sierra charts, and then that bottle runs it. It's similar to, I think what's happening is a virtual machine. There's no clutter on my drive, but it does get mounted and attached to my drive. And I am pulling copies of it and putting it in storage and backup so I don't lose anything. There is a DOM on it, David. It's definitely not going to be enough for what you're trying to do, sir. I can show it to you, but there is a DOM. There's a button, level 2. It's on the right. I can find it. I can try to find it. Let me see. There is one. It's not good. It's not terrible. It's not good. And you got to be careful. TradingView is not unfiltered data. TradingView is aggregated to the second. Same reason why I can't use Interactive Brokers because Interactive Brokers has a decent price ladder for execution. I actually really like it for futures trading. Just their data stinks. All right, let's get into it. I'll answer a few more questions as we go. So first and foremost, the things we need to understand and know for today's session. Let's look at the very left chart first. You know, we are getting some value area migration higher. So TPO analysts and volume profilists get really excited at migrations. All right, so we migrate a little bit higher. We are inside of value of a candle that sort of the last bullish one before this big spill, and now we have a recovery. So it's a bullish thing that we're accepting the value, and we're moving upward, and volume is shifting upwards. Price is going up. If price is going up and volume is moving with it, it's an acceptance of higher price. All right, now look at this chart here, because these are the next chart. I go left to right. These are the call option levels. So you got something around the 65 to 75 area. This is our first resistance. It's not the biggest. The biggest call option resistance remains at 6,900. This is where dealers are short gamma. And as we start to break above this level, they're going to have to start buying futures at or below this level. They're going to be selling futures to hedge gamma. Downside support is about 6,805. It's interesting, a nice level because it puts a little bit of a floor to this downside, but it's still really far away from where we are, 75 points lower. All right, but something for you to note and to know as well. So let's get into the trading plan. Didn't intend to share all that with you, but now you have all my notes. All right, yesterday's sell-off recovery was textbook for us. Remember yesterday I had my back turned. You guys are, George, turn around and see what the heck is going on, and I turned around and there was a big giant dump happening in Microsoft. All right, and the news there was that there's going to be less sales, but then the news was rebuked and ended up being a rumor report. And I was saying to you at the beginning, guys, don't panic. This sell-off wave is probably the biggest gift we're going to get. You guys remember that yesterday, that discussion? And I said, why is this the biggest gift? Because instead of waking up at not all-time highs, but at trends movement highs and wondering what to do, we got the flush of all the buyers, which actually gave us the spring to start heading forward. I said this sell-off took out all the buyers. Now you have space to buy. We're probably going to head up from here, look to the long side. And sure enough, that's what happened. Yesterday's levels were here. These little green ones are the levels I couldn't have ever planned because these are order flow levels, and this is where the team in the room took shots. And to me, the best shot was this 20. I had it within ticks of the day session low, and I moved my limit orders that were targets. I was trying to move them higher before the price touched it. It went through and wiped them out. But I had it within ticks of the day session low, planning to hold some higher, and I couldn't move the limit before the market took me out. At profit, mind you, but I got out. So now I had to set up the next trade. The next trade for me was in these low 30s, and we had these order flow moments. And you could see, in hindsight, these look like the levels of where we're going to be anyways, but in real time, these levels happen on order flow moments that are so clutch and key that it's real time price discovery. You're not focusing on predicting levels, because when you draw a little level on a chart and you say, I want to see it down here as part of my plan, if you think it sounds normal for you to say, oh, I want to see it at 56 and I'm going to buy it, but setting a level is slightly psychotic. Right? Because it's your opinion, it's your analysis, and think about what you want. You want the market to drop to your level, but not too much below your level, because then you're going to get stopped out at your level, but you want it to stay at your level. And how wide should your level be? Oh, it should be 5 points. We're trading 50 points above your level. So when it comes down to it, I want it to come down, but not too much, because I want it to hold, because I want to get in. I don't want to get stopped. Then I want it to suddenly turn and reverse and keep going up. You're asking a lot of the market to have that level of control over it if you're not trading thousands of lots. If you're trading thousands of lots, kumbaya, let's put levels all over the charts, all right? And the market will probably respect them because we're going to create that turning point. But to say I want it to come down here first for me to then buy it but not go too much lower because I put my stop here, then to go up, that you're asking for a lot. And what you really want to see is the real-time order flow levels. And the moment I stopped focusing on finding levels that in the future that work and telling myself I'm releasing all expectation of this market, I'm going to let the order flow tell me right now what's happening, the easier I found it to find good levels, the easier I found it to have trust and faith in the market, because I'm not rubbing a crystal ball hoping it works. I'm looking at the strength of the auction and deciding at which point it's going to carry over to real momentum. And it's been nailing these levels. All right. And it's been, I want to say easy because then you guys are going to make fun of me, but it's easier. All right. I want my market to go my way, right, Marco? Me too. All right, Mike. See you in the room, pal. So this is now, despite saying all that, these are some levels that I do like that I think should hold out for the market. And this isn't where I'm saying you should put your buy limit. This is where I'm saying above this level, we should get some more bullish sentiment. Let's see in real time where levels are. Because right now, I could draw a couple. I could say 64 would be a good pullback. I could also say 68 is a good pullback. Ultimately, any and all of them may work, but we need to find a very specific pattern inside that level for it to turn green like this. All right, these green levels are formed off of my order flow real-time system. So, but the transition level I like is 56. Anything above 56, we should take a shot higher on today's session for the bull extension. And this is what I wrote in my notes, and I wanted to tell you this, is that we got to bid and not look back today. To stay bullish, we have to open. We have to send this thing higher. We have to make people regret and panic that they didn't buy it. And we have to make them start chasing it. We can't let every buyer get a fill. On the open, we're letting too many longs get too many fills and giving them too much time to put in a position, long trade is over. Let's start getting short. We might as well. All right, it's too late. So we get a turbo bid higher. People start chasing it, and they start saying things like, oh, I can't believe I didn't get in. Oh, my God, I'm going to get in down here, but it might not happen. That's when you smile and you say, perfect, up we go. All right, you want people to not be in and confused as to why they're not in and deciding whether or not they're going to get in, because that is going to be the fuel to push it higher, to drive them absolutely nuts and turn into like reckless buyers. That's who you sell it to. That's the person that is going to buy your order when you sell it higher, right? You got to be in when there's still risk. So with turbo bid off the open would be the ideal play. Any rotations here with buyers and no price advancement, I think we're stuck, and I think we pull back. Where do we pull back? I like the high to mid 50s on the S&P 500. So this is this level here that I've drawn. 60, mid 60s are okay too. Below that, I don't really want to get too bullish, but this would be my last point here. If I would say the 44 is anything, I would say it is the turning point of the day. And I am not going to turn it green because that looks terrible. Yellow, sure. Now it just looks like freaking Skittles. The green levels are absorption stuck sellers. Pencho Penchev. That's a great name. Are you Bulgarian? So essentially, Pencho, what it is they're not really stuck because these are buyers. All three of these levels I remember were buyers. There was one level where there were stuck sellers, and then in addition to that, we got market buyers. But what it is, Pencho, is market imbalances, and it's an imbalance based on a diagonal auction. So you're comparing the market orders that trade at the offer versus the market orders picking the bid. So you're getting sell market orders, sell market trading with bid limit, all right? Buy market trading with offer limit. The thing is, that's not a horizontal relationship. The problem with Delta is that's all horizontal. Let's say 62.5 is negative 500 contracts. All right, on balance. Yes, but 62.5 never traded against 62.5 ever. It's not possible because there's one tick of a spread, all right? So therefore, it's the diagonal auction, which is the most important, that creates the imbalance, because it is the relationship of market order to market order, and you're seeing relative market order strength, not market order versus limit order strength. That's kind of like the deep explanation. And now that you're saying a lot of icebergs yesterday, I know you watch order flow very closely, and I'm certain I over-explained it, but hopefully it was helpful. Maybe not for you, but maybe a lot of people got something out of it. But yeah, that's the play, guys. That's what I'm looking for. I'm looking for another order flow moment. Let's turbo bid. Exactly. Boom. You get it, brother. You get it. This is what I'm saying, and this is the basis of my entire system is this chart. All right, I'm going to show you because it is a footprint chart, essentially. that you see these green things. These are the imbalances that we speak of. And then I also have the heat map overlaid because I like to track the pattern of inventory movement, which is intention. And then I like the imbalances because this is execution. So you're mapping intention versus execution. And, you know, it really just gives you everything you need to see in real time. And then, you know, on the DOM, the thing with the DOM is it's hard to get to the point where you could read the DOM where you need to read it to be useful. And so these charts tend to be better. I used to look only at the DOM and a price chart to trade. And I've kind of shifted my focus on footprint, diagonal imbalance, inventory changes with delta on the side. Beautiful. Yeah, how do you know that, Pencho? Were you part of the community before? 24 reversal. It's reversal minus minimum length chart on Sierra, and the reversal is 24. But 24 is so key because it's everything. That probably is the sauce. It's a type of chart and the periodicity. All right, love you guys. Pencho's going to uncover my entire strategy and pick my pocket here if I keep talking. Just kidding, guys. I appreciate you. That's the play. Watch the market. Strong bid on the open is going to be very hopeful. It should leave as many buyers behind as possible. That's the best outcome in scenario. Run to 6,900. Any time we spend here buying and rotating and too many people getting a chance to get in, the more likelihood for the pullback is, at which point we're looking at these mid to low 50s and then kind of mid 60s as well. We're looking for an order flow pattern to occur there in real time. All right. I'm just having fun with you, Pencha. It's fine, man. It's you know, it's we both know that the system itself is great, but the execution of it is the real, you know, sauce. And luckily, it's what differentiates us all, and we can find our own edge in. I'm gonna wish you guys a great day. I gotta go in the room now. I really appreciate you. Have a great rest of your morning, and I will see you guys here tomorrow. Thank you for the discussion. Love y'all, and see you tomorrow. Ciao. Let's see what we get in this market. Let's get to the trading room. For everyone that's part of the trading room, I'll see you there.